Retirement.
The word sounds peaceful, doesn't it?
A lifetime of work finally behind you.
Waking up without an alarm clock, drinking coffee while the world rushes to jobs you no longer have to go to.
It sounds perfect, until that quiet morning turns into a question you can't ignore. Am I really going to be okay financially? Most men don't ask that out loud.
They just feel it. A silent pressure that builds with every bill, every market headline, every moment they realize the paychecks have stopped, but the expenses haven't. It's not fear of being broke. It's fear of losing control. Here's the uncomfortable truth. Retirement doesn't mean financial freedom. It means financial responsibility with no backup plan. And most men walk into it blind. But here's the good news. You can rewrite the story before it writes you off. Because the men who thrive after retirement aren't the ones who made the most money. They're the ones who learned how to make their money work for them. And that starts with one simple mindset shift. You didn't retire from income. You retired from employment. There's a big difference. Think about it. Employment gives you a paycheck. But income? That's a system. And systems don't clock out when you do. The moment you stop thinking like an employee and start thinking like a strategist, everything changes. Maybe you've already noticed it. Prices rising faster than your pension check. Groceries, insurance, medical costs, all climbing while your savings slowly drip away. It's not just inflation, it's erosion. Your money's losing muscle. So what do? Most men panic. They cut back. They downsize. They shrink their lives. But the smarter play? Rebuild your cash flow. Because here's the truth. Retirement isn't about living smaller. It's about living smarter. You don't need to cut joy. You need to cut waste. You don't need to grind harder. You need to design smarter. Now, before we dive deeper, if you're watching this right now because you want to take back control of your finances and your future, do me a favor. Hit that like button. Drop a comment below telling me your biggest financial worry, and subscribe so you never miss what's coming next. Because by the end of this video, you'll see how men just like you are creating real financial freedom after 60. And it's not from luck, it's from leverage. Alright, let's get real. Every man faces 3 money traps in retirement. And if you don't recognize them early, they quietly drain everything you worked for. Trap number 1, thinking saving equals safety. You were raised to believe saving money was the smart move. But saving sitting in a low-interest account today? It's like watching your ice cube melt in the sun. Inflation eats it alive. Real safety doesn't come from saving, it comes from strategy. That means learning how to turn static savings into income-generating assets. It could be dividend stocks, rental income, annuities, or even digital ventures that run quietly in the background. The wealthy understand this instinctively. Money that doesn't move dies. And that brings us to trap number 2, believing retirement is an ending. Most men treat retirement like a finish line. They exhale, celebrate, and then drift. But the real winners? They treat retirement like a relaunch, a second act. You see, your experience, decades of problem-solving, leadership, discipline, that's gold. And in today's economy, experience is currency. Consulting, mentoring, or part-time passion projects can create a fresh income stream and purpose at the same time. Imagine helping younger guys avoid the same mistakes you made. Imagine turning what you know into what you earn. That's not going back to work. That's leveraging wisdom into wealth. Now, trap number 3, ignoring the silent killer, tax drag. You might not realize it, but every withdrawal, every distribution, every little bit you take out could be setting off a tax time bomb. Most retirees focus on how much they've saved, not how much they'll actually keep. The fix? Understanding the sequence. The order in which you pull from savings, pensions, and investments can mean the difference between comfort and chaos. The smartest retirees use tax-efficient strategies, like Roth conversions or timing withdrawals, to stretch their income years longer than they ever thought possible. Now here's where it gets interesting. Most men think financial success after retirement is about numbers. But the truth? It's about nerves. Because once the paycheck stops, every dollar you spend feels heavier. And fear makes bad investors. That's why emotional discipline becomes your new currency. When markets dip, the untrained panic. The prepared see opportunity. When costs rise, the untrained retreat. The prepared adapt. The question isn't, do you have enough money? It's, do you have enough calm? And that calm comes from clarity. Let's talk strategy. There are 4 key income engines every man should know after retirement. First, Social Security or pension optimization. It sounds boring, but it's the backbone. When you take it, how you combine it with spousal benefits and how long you wait can change your lifetime income by tens of thousands. It's not just collecting, it's timing. Second, investment income. Instead of chasing high returns, chase reliable returns. Dividend-paying ETFs, bonds, and REITs can produce passive income without sleepless nights. But here's the trick. Structure your portfolio for withdrawal efficiency, not just growth. Third, side or semi-passive income. That's where modern retirees are rewriting the rulebook. Digital courses, affiliate marketing, part-time consulting, these are the new tools of freedom. You don't need to build an empire, you just need a few stable streams. Because multiple small rivers fill the same ocean. And fourth, expense control through systems. Automation isn't just for the young. You can set up automatic transfers, recurring bills, and spending rules that protect you from impulse and ensure stability. Because the less emotion in your money, the more control you keep. Now let's hit something most people never talk about, regret math. It's the quiet equation playing in every retiree's mind. If I had started 5 years earlier, if I had invested differently, if I had saved more. But regret is a useless currency. It can't be spent. What you can invest now is attention. Because every year you delay adjusting, your lifestyle silently shrinks. But here's the payoff, every small change compounds. Cut one unnecessary bill, optimize one investment, start one income stream. That's momentum. And momentum is addictive. Think about it. The moment you take action, fear loses power. The moment you understand where your money flows, you reclaim your sense of control. And that sense of control? That's worth more than $1 million in peace of mind. But the men who actually achieve it all share one uncommon trait. They stay curious. They don't say, I'm too old for this. They say, teach me. That curiosity is your greatest asset now. It fuels adaptation. It keeps you young, not physically, but mentally. Because the day you stop learning is the day you start aging twice as fast. Here's a quick story. A 67-year-old named Mike retired early after a career in logistics. He had $700K saved, felt secure, but started watching his balance drop as inflation spiked. Instead of panicking, he learned digital skills, set up an online course teaching small businesses how to manage inventory. Within 2 years, he'd replaced half his old salary, working from his laptop, part-time. That's the new model of financial freedom. It's not about passive income, it's about progressive income. Income that evolves as you do. And maybe that's the deeper truth here. Retirement isn't about retreat, it's about recreation. Your value didn't expire when your job ended. You didn't stop being capable, you just stopped being paid for it. But in this era, you can change that. So, if you've been staring at your accounts feeling uneasy, here's your wake-up call. Your best financial years don't have to be behind you. They can be redesigned ahead of you. Let's talk about how. Step 1. Audit your lifestyle, not your bank account. Start with where your money actually goes. Most men underestimate discretionary spending by 30%. When you track it honestly, you'll see what's feeding your stress. Awareness equals power. Step 2. Automate your essentials. Bills, insurance, medical payments, make them invisible. When the basics run on autopilot, your mental energy stays focused on growth, not maintenance. Step 3. Reinvest your time like it's capital. Because it is. The hours you once spent working, they're now your new currency. Spend them learning new income skills, digital, creative, advisory. Because time invested in skill compounds faster than money invested in markets. Step 4. Build your sleep well fund. That's not an emergency fund, it's a confidence fund. Enough to cover 6 months of expenses. When you have it, you make smarter, calmer decisions. Without it, every hiccup feels like a crisis. Step 5. Diversify your identity. You're not just a retiree, you're an investor, a mentor, a creator, a man in his second act. When you broaden your sense of self, your opportunities multiply naturally. Now let's face something raw.
A lot of men avoid financial conversations out of pride. They don't want to look like they're struggling. But hiding from numbers is what keeps you trapped by them. Real strength isn't pretending you're fine. It's admitting you want better.
And here's a secret. Women tend to outperform men in long-term financial planning because they talk about it. They seek advice, they compare notes, they plan collaboratively.
You can borrow that strength.
Find a network, a group, even an advisor who treats your retirement not like an ending, but a beginning. Because the minute you bring awareness and accountability into the same room, your money behavior transforms. You start realizing that every dollar you control is a tool of freedom, and every dollar you ignore becomes a chain. You didn't work 40 years to live scared. You worked 40 years to live smart. And the best part? You don't have to do it alone. Communities of retired men online are trading strategies, sharing insights, learning investing together, and rebuilding confidence through collaboration.
There's no shame in learning at 60. There's only power in adapting at 60.
Now imagine this. 5 years from now, you wake up, and instead of checking your bank balance in fear, you check your dashboards in pride.
Your dividends are growing.
Your small online venture is paying for your vacations.
Your home's paid off. You're not surviving, you're thriving.
That's not luck. That's the reward for action. But you'll never reach that moment by hoping. You'll reach it by choosing. So choose to act now. Choose to question old financial myths. Choose to treat your experience as leverage, not leftovers. Because if you can handle raising a family, building a career, paying bills through recessions and chaos, you can absolutely master this next chapter. The biggest financial mistake men make after retirement isn't a bad investment. It's inaction. They freeze.
They hesitate. They tell themselves they'll figure it out later.
But later always costs more. So ask yourself right now, what's one small action you can take today that your future self will thank you for?
Maybe it's setting up that budget app. Maybe it's calling a financial planner. Maybe it's learning a new income skill online. Whatever it is, do it today. Because wealth after retirement isn't about luck, it's about momentum. And momentum loves movement. So start moving. Because the only thing scarier than running out of money is running out of purpose. And financial security isn't just about numbers. It's about knowing that the life you built still has power, meaning, and direction. You've still got decades ahead. Make them yours.